Well, good morning. All right, so see if we get this working here. Been just kind of playing around. Had a stream scheduled early this morning for the evaluation strategy on the CPI number. I shut that stream off. It's just a random gamble thing. Anyway, that I've been trying to work on. That stream is shut off, and this is the new normal stream and normal account. I thought it better to keep them separated. The purpose of the stream is my virtual journal, obviously. I have a commitment not to take any trades off stream, and I have not done so. The idea is that I can hear what I was thinking by my narration and obviously see what I was seeing. So this is, all that disclaimer crap is in the description, and it's, this is for entertainment only. No financial advice. It's my journal. If somebody wants to look over my shoulder, that's fine. If not, well, don't. Pretty obvious. All of the times here are Central Standard Time. My charts are that I refer to. And yeah, so let's get on with it here because I started this 5 minutes late. Sorry. Anyway, we had CPI out this morning and initial jobless claims and continuing jobless claims. That was the number at 7:30, which I tried that evaluation strategy thing on just for fun. And that's all over with now. And we're going to be opening here at the, actually, this is the number at 7:30. So it was, fairly volatile. About 10 or 12 handles up and a whole bunch of them down. So that was the number. Let's get on with the pre-market here. Okay. So that was the pre-market. Now, in general, the real pre-market is best viewed here, I guess. This is the ES. This is my IRT charting setup. This is the overnight. So we trended up and then basically down, but not too far. Just a little below our close right now and within range. So the open type would be, so there are only two requirements, and it is the proposed or the expected open of the upcoming RTH period as it relates to the close of the previous RTH period and the range of the previous RTH period. So we're looking to open lower in range as we stand right now. This is the NQ. This is the micro composite chart, which are just daily RTH bars of the ES. And wherever price is overlapping, I draw a volume profile around them and continue that out and call that the micro composite. There's a high, there's a low. Yesterday, we got a new all-time high again. These red and green lines are the high volume and low volume nodes, which are pushed automatically to Bookmap. All of these price levels are those which are pushed to Bookmap, and alongside of which I enter the statistics for the relative price. And this is the market profile. This is Bookmap. Here's the high time frame column, which is where I enter those annually. That's the all-time high. That's an MCVPOC, which is long gone now. Boop. These are the high and low volume nodes. This is the full session, my volume profile, which started at 1700 last night. This is the RTH volume profile, which will reset this morning at 8:30. The delta for the RTH. The chart volume profile, which just plots what you see on the chart. This is a column where this is just a notes column. And I do things like this. This is manually entered stuff. I changed that title so that I can just take one look at the snap or the stream and see what the open type was without monkeying around. I enter all of this statistics related to these price levels in this column. This is the most recent RTH auction naked volume point of control. In other words, this is the volume point of control where we closed yesterday's RTH auction. So that's the first most recent auction, naked volume point of control. I'll also enter when the market opens. I'll also be entering migrating VPOC flags every place that the POC moves during the regular trading session hours will look like this. The object of the purpose there is obviously the yellow line will continue to plot always, but it scrolls off the left, so I don't have to go back and forth. I can look right in one spot and see where we were. The price levels now are right here. And the way the statistics work is the following. This is the statistics study right here. Only difference is the opening types, which I just described. So we're looking to open lower in range, this one right here. How that's determined, I just talked about. But the way the study works is as follows. It looks back at 2002 days. Of these 2002 days, we opened 598 times, or 29.9% of those days, lower in range. Of the lower in range open, this is the number of times and or the percentage of which price in the upcoming RTH period revisited all of these price levels. The most prevalent or the most highest probability is the overnight point of control at 84.9 typically. So overnight volume point of control 84.9. Boop. That's just how complicated it is. And then you enter the rest of them. Overnight low, for example, is 67.6. Overnight high, overnight mid is generally the second highest probability, and it's 83.6. The overnight mid, yeah, and I mean, what a surprise, right? Usually they're separated a bit further than a tick, but in this case, not. The overnight high went somewhere. 51.5. The previous RTH high, it's 38.1. Not a very high percentage we get up here, huh? And that's been hit a few times in the past few days. I mean, these statistics, obviously, I would hope, obviously, don't change a hell of a lot day over day because we're looking back over 2,000 days, right? So that percentage is not that great. So it's, you can pretty much bet your bottom dollar that the overnight VPOC followed in hot pursuit by the overnight mid are going to be the top 1 and 2. And then we have some of the others, the overnight low and high. Those are also usually high statistics. And it goes on, right? So that's how the statistics work. And a word about the levels and the prices. First, you may have noticed or not, there's no indicators on any of my charts or my book map. None of these lines are indicators. They are price levels. This line is drawn with the same data that's the IB high. Overnight mid, yesterday's mid, value area low. Now, explanation of some of these. The IB high and low are nothing mysterious or magical. It's simply the high and the low of the first 1 hour of the RTH session. That's all. IB is an old market profile term for initial balance. It's just hocus pocus. It's the high and low of the first 1 hour. That's all there is to it. The closest thing I have to a calculated indicator is the VWAP, which is the volume weighted average price. I have one for the RTH, and I have one that you can't see right there for the ETH, which is maybe a misnomer because it's not really the ETH. This is really the full session. This started at 1700 last night and will continue to plot through 1600 today. I try to change that if I can. The point of control here is for the previous, or for the RTH, it's a brighter yellow. The point of control for the, you can't really see it here because they're on top of each other. Well, maybe if I wind it out. The point of control, now there's just right on top. The point of control for the overnight is a darker yellow. There you go. Point of control is nothing magical or mysterious. It is the point of control is simply the price at which the most contracts have traded so far in the session. Right there, 58.30. So more contracts have traded at 58.30 since 1700 last night until this moment, 4,725. The minute this price up here trades 4,726, the VPOC will move there. That's all the hell there is to it. It's not, it's just math, and I mean simple math. This is the mid of the RTH period, which I don't bother with the mid for the overnight. The difference between the developing value area low or high and the value area low or high is as follows. Developing is the current auction, ETH or RTH. The value area low or high is for the previous RTH period or RTH session. The little granularity here in the heat map is a visual representation of the liquidity resting in the book. That, I think, pretty much covers that. Okay, we need to set up our trading ability, which I've already done in advance here. This is the multi-brackets. This is the 2-lot risk neutral package. 2 contracts with stops at 12 ticks. The first risk neutral scale is at positive 12 ticks, and the runner's at 48. The minute you hit this first scale, the worst that can happen to the trade is a scratch. That's why it's risk neutral. There is no more risk. It's an amazing impact on your psychology and also the trading. Then you have to initiate the trade control panel. I trade with the dome only rather than chart or both because I initiate my trades with the keyboard, and then I can manipulate my trades, targets or stops here on the dome. If you have chart or both selected and you accidentally click in here inside of this active data window column, you've entered a trade whether you wanted to or not. And obviously that's happened to me trying to move a stop or a target. So that's why I use the dome. It's perfect. I enter with the keyboard and I manipulate my stuff with the dome here on the dome only. I can click anywhere I want to click over here and there's no problems. Obviously, once you've selected the one you want, you confirm that it's reflecting the setup from the multi-bracket and we're ready to go. So at 8:30, we'll have an open. We'll start to track the migrating volume point of control, and that'll be that. Now, I'm going to get ready for my snap for the TLab, which I do every morning. I do a report numbers post about 6 o'clock or so. and I do this TLab snap every day at 8:20. And what that snap looks like is this right here. And the idea is just to give folks in the TLab that don't have all the, this type of charting, all the numbers and everything they could possibly wish for. And also really cuts down. I started doing it to cut down on all the people asking 1,000 times, what's VWAP? Can somebody tell me what the VWAP is? What's the POC? So this was just a one-stop shop. And I do that every morning at 8:20, which is right now. The TLab is a bookmap Discord chat room called the Traders Lab. It's completely free so far. You don't even have to be a subscriber to Bookmap, which is pretty phenomenal. It's started by a guy named Tom B., who is a professional trader, 45 years experience trading his own account very successfully. He shares the same ideas or his viewpoints about trading as a business, risk management, all those kind of things are similar to mine. So I guess that's why I appreciate it. But the reason that I recommend it, and it's the only place on the internet that I do recommend, there is absolutely nothing for sale. He's not got any ulterior motives, pimping, join my website, buy my indicator, what the hell ever. And I will not say that for everybody else that presents on the Bookmap Discord sites, because the one or two, I haven't listened to everybody, obviously, but the one or two people that I have listened to, the first or second word out of their mouth is buy this, join that, here's my this, it's just obnoxious. They're just typical internet guru bullshit artists selling stuff, just hawking crap, and I'm pretty sick of people grifting from the politicians, political candidates right down to the internet guru guys. So that's where that's at. So it's called the TLab. You have to join the Bookmap Discord site, obviously. There's a link in the description here. Once you join that, go to the Traders Lab by Tom B. Everything's free, 60 PDFs of structured trades and all the commentary. And there's some good people in there that have good trading ideas. And I think some very successful traders in there, if I'm not mistaken. So there you go. And with that, I will now fall back, get ready for the open, water bottle, file break, all that stuff. Boop. Okay. I guess that's enough. Man, we're way down here at the bottom. Another word I forgot to mention about the risk neutral trade package setup and my trade plan. There's a few extra rules that are pretty important in there. An entry is not valid if I must have a unobstructed path to the risk neutral scale. In other words, there's got to be an unobstructed path for 3 points to that first scale. This is 21. This is 24. Yeah. Long to there, no problem. Up here to there, nope, because it's less than 3 points. And that's a real filter, I'll tell you. That keeps me sitting on my hands watching a lot of the time, a lot of the days, sometimes all day. Yesterday was a classic example of that. They were just stacked up every couple of points, and that makes it impossible for me to engage so far, as you know, till I change the rules, which you never do during the trading session. You analyze them and set up and change those rules afterwards. Okay, let's see, where else the hell am I going here? After that report, I don't really know. There's a lot of stuff yesterday. First of all, yesterday's high has hardly any excess, which is typically not considered a completed auction, and it usually would go up and add excess to the top. But that was an all-time high and a new MC high and a bunch of other crap. So, you know, what I'm talking about is right here. You see, it's just flat across the top, and that's the overnight high. Maybe one tick up there, which is basically nothing. This is the market profile. Now this shows excess at the top on the market profile. But if you see the volume profile up here, just one or two ticks, one or two contracts, very, very, very blunt, as opposed to the taper that happens frequently, or supposedly to have the tails of the distribution. You can also see that here, I think. See, it comes right up here and then bam, shuts right off. I don't know. I mean, I'm not saying I know anything. I'm just saying, well, I'm just making observations as we wait for the open here in a minute. I also like to keep Bookmap wound out to this degree where I can see this grid, have about 2 ticks between these price levels, because otherwise I find that I don't have a proper sense of scale with around movement, right? And we're going to open here at the bottom of the hour. A minute, it says. I have no idea what's going to do. You would think that overnight inventory is basically 100% short, with just a couple slight excursions above close and settle. That there would be some responsive selling for profit taking. There we go, is the open. And here's our first epoch migration. And that's how that works. Now we got a whole buttload of stuff right here, right? And these are real high probabilities. Are we going to trade down here for a swing low and then head up? Well, we've had a VPOC migration lower so far. I find that if you're, well, I think it's trading the open at this time frame is akin to gambling. Some folks, Tom, I'm sure is going, well, we had VPOC migration. That's a structured trade. We're below VWAP and mid. And so we're going to looking lower. And let's see. Let's see. Now you see that the green line of the IB low is set right here where it's supposed to be. Well, actually, it'll migrate in a minute. And now the flag is just caught up. That's not because of the data issue or a bug. Those are both pushed from the same data in IRT, which is immediate. But the idiosyncrasy of the cloud note column in Bookmap and the indicator in Bookmap, the most or the smallest refresh time I'm able to set in the cloud note column is 1 minute, and this indicator is written with about 30 seconds. So that's the difference there. It'll be this. It's the same for not only the IB high, but for any of those levels. Well, here we are. We haven't traded through any of our levels at this point. We're in a 5-6 point range. We're 2.5 minutes in. Anything in here would not be able, I would not be able to trade anything in this. Remember my 3-point range requirement? Not happening. So that's something that I will have to address, explore in the real work of trading, which is after hours when you're doing the statistical analysis to identify what setups and criteria have an edge. And, optimizing your trade management ideas. What percentage of the time do you get to risk neutral scale? What percentage of the time do you achieve the second target at 48 ticks? How about if you move that second target to 36 ticks or 24 ticks? What are the probabilities of both of those options? That's the work. It's like being a data engineer. It's not being a gunslinger. Tom is thinking that we're going to target the overnight low. He chats throughout the day, comments in the Traders Lab, not verbally, regular text chat. He does stream every day from 10:30 to 12. That's YouTubed and Discorded, but everybody, of course, participates in the chat. My problem here is, let's pretend that I share his opinion that we're going to go test lower. I can't get in any of these areas because of the range requirement. And there's something called this asymmetrical trade location, which means that if I short up here, where's my stop? It's right above. I can be 1 or 2 ticks above and have a longer or a greater risk reward ratio. So this is an asymmetric relationship. If I short down here, there's a lot of things wrong with it. It's a breakout, which I consider a FOMO error. Your stop is right in the middle of all this traffic. And this is precluding completely the rule that I must have 3 points. Now, if I were going to take this trade from developing value area low or the IB low, current low of the day, which is IB, down to the overnight low, that would be a breakout trade. And that's not in my trade plan. So that's this is a tough, this is some what if stuff that I really need to address or figure out, address mess that I need to understand and come up with the right idea. Just like that evaluation statistic. I've gone both sides of it now, and I got to find a happy medium there for that to work. This really, so far, what are we doing so far? It's mean reversion. So far, we've been outside in. One, 2, 3. Now what are we going to do? 4 or 5 or down? And this is why me taking this short to the IB, the overnight low, isn't a valid entry, because that would be a breakout trade. Also, it's putting my stop smack in the middle of all this traffic. I just think it's a real low probability deal. And with this 3-point range criteria I have, it's a real pain in the ass, frankly. And I have no problem, fortunately, I have no problem being disciplined. I mean, even though, like I'm thinking now, what would I do here? What should I do here? Well, this is, and unfortunately, I'm just me. So it's, if you're a trader on a big desk, you got a whole bunch of data minions sitting behind you doing all this what if shit for you, but I got to do all this myself. Is it going to break down and trade down towards that low? Yeah, probably. We've got the IB low just below previous day's low, which happens to be the overnight low. I don't mean previous day's low. I mean the overnight low. So here was the IB, I don't know. Down here's the overnight. Down here's the RTH low, where the IB was. What Tom is targeting is this one right here, which is here we go. It's gonna get it, that 67% statistic, but for me, there's no entry there. Anything up here is diddling in the middle. Yeah. Sucks, actually. Yeah. It sucks. And you see what happened there. If you were taking this pullback or whatever, or is this the pullback for lower? Just below mid, just below VWAP, just below VPOC. I think that's a real low probability setup. And it isn't anything I certainly have done the numbers on. And I find that a lot of people, one of the things I will say about the TLab is I think a lot of people use the term vetted trade real loosely. I don't believe that probably 90% of them have vetted one trade, let alone all the ones they post. And a lot of them are very successful guys, but there is that. So if you go there, don't be lulled into thinking these people have gotten hundreds of hours of data analysis done. I don't think it's true. And nobody's ever been able to show the statistics, which I've asked for more than once. That I'd be really curious to see the data that vets that trade. What's the probability? Kind of crickets at that point. Well, we seem to be trading lower. We're getting some. We've extended that down now for a ways, 10-point or 11-point range so far now. And in reality, the trade is this mean reversion. So 17, 20, there's your scale. It's not reverted to the mean yet, but that doesn't mean it's over, except the mean just migrated. So VPOC is migrating lower, looks like. Again, it's just the price at which the most volume is traded so far. And in the early minutes of the session, the VPOC is very, very, very volatile because why? The volume is so light. It doesn't take much to change from 97.98 to 97.99, or whatever, whatever I'm saying, 27. You get the point. If it's a matter of thousands of contracts, that's one thing later in the session. And in this case, if it's a matter of one or two, to make a substantial difference in the VPOC location, then it's a lot easier to move around. And all these levels in the way, there's nothing for me to do here. The only trade that has happened so far today that would have been valid in my world, my trade plan, is this for a mean reversion. But where's the trigger? Where's the setup? It comes down to, remember that this was up here someplace. So it trades down here in outer space and then does something. And the low is right here. And there's a potential low statistic just below it. That's, it's real easy. That rearview mirror trading is real easy to do. That's the stock and trade of the gurus. What you can call something similar to this is exhaustion. They traded out 120 contracts. They bullet up here. They tried to come back down, and they only got whatever that is. They only were able to get this little amount here, which doesn't even show up. And then buyer stepped in. But by then, you're 2-3 points up the game, or you're at least a point up. It's just. And look at this mess here. Look at this. I don't think there's anything following. I don't believe. Yeah, well, FOMC Williams speaks at 10. And then there's the 30-year bond auction at 12, which is a 3-star event. I'm tired. Irritating and tired, frankly. That stupid report thing, I'm going to stop worrying about that. I don't think. I mean, it was fun to think about and it's fun to do if I'm awake, but I'm not going to make any special effort to do it anymore. Now we're going to get down there and take that overnight low? Maybe not. We're certainly at a level where we've been before. Come on. At a level where we've been before. So are we going to mean revert? 7 to 20, 17 to 20, that would work. Pretty. I think I forgot to put the open in there, so yeah, the chapter, but so what? It is what it opens at 8:30, so that's pretty obvious, isn't it? Well, there we are. There's that overnight low. So Tom will be vindicated in his prognosis. But I don't have any, that trade doesn't exist for me at any point, which is really disappointing. And so if it doesn't work for your trade plan, well, then it doesn't. quit gambling. Yeah, so these guys are talking about their great trade here, which was short right here. Well, that is right in the middle. I guess the one thing it has going for it is the VPOC migration. But right in the middle of all of this traffic and the VPOC, it worked out. But that's about as contrary to everything I would think of as prudent trading as than flight of the moon. That's amazing. Yeah, so they're taking the VPOC migrations. I don't know what the hell they're even talking about. I mean, they make a lot more money than I do doing this, apparently. And I guess maybe I am way too rigid in my rules and my planning. I guess that's probably part of it. So we only have epoch migrations south. We did take out the overnight low. I guess that was the place to go long somehow for a mean reversion trade. And then you'd be sitting on a scale and seeing what happens next. I'm obviously way too rigid and maybe tired. I don't know. Disappointed, whatever it is. Now, I may think that this this pullback to the open here is a fairly good possibility for a long. Late. Late for the days. And get up there. One more tick. One more tick. Look at that crap. There we go. So there's a risk neutral scale. I think I have a way to do this. E1 R and scale. Well, now we got a whole lot of crap up here, and what are we going to do? We're going to get up through all of that and get on to our next whiskey bar, or what? We don't know. But I'm scaled now, and I'm risk neutral. So if it comes back in my face, I'll move my stop to just a tick above that to take care of any commissions or whatever. And we'll see if we get on up out of there. And we've got the runner target up above, which is below settlement. So that's not entirely out of the question. And we have the original naked volume point of control up here, which is the most recent auction. So let's see what happens here. I need to widen this out. Widen this out. That was a 3-point range, by the way. Pretty close, but a late entry. I was trying to catch it right here, and my finger's just not typing quick enough. And it may come right back in my face, too. You never know. You never know what's going to happen here. I would say looking likely. Yep. And there's the scratch. They did take out both, if you notice, of the overnight volume point of control, and they got both of these statistics taken out in that swing. And I guess if I'd have been more on the ball about that, yeah, well, see, that's hindsight. Should I have taken it off, or should I have stuck to my trade plan and left it at scratch as I did, or shall I have put it at break even? Those are all the things you need to do the what ifs about. And was this reversion to the mean a point to trade back out? That's not what I do. I don't trade from the center out. So yeah, trading, the joy of trading. Better make sure I got all these snaps snapped. Yeah, traded right down to the VPOC and then back up again. Now, this is not any kind of trade I'm going to do, which is somebody's going to say, well, I traded a mean reversion short from the VPOC and mid back to the MCVPOC, which is a valid thing to say. I was long here targeting these two and got them, but didn't have enough room above it. I thought they'd catch a bit of a run on some of that overnight profit taking that I mentioned that I was suspecting. Got to change my RT chart. I thought that they would continue on, and they didn't. So there you go. But you see the beauty of a risk neutral trade package. There's no emotion. There's no anxiety. The minute that scale's hit, you're completely free to just let the trade work out. And 2 or 3 people are posting taking this trade or this test up to the mean reversion. So Okay, so maybe a good time to talk about the IB, the initial balance, which is, remember, just the high and low of the first 1 hour of the RTH session. That's it. But there's a couple of statistics around this levels, which are very, very widely known and have been discovered, years ago. That says over 97% of the time in any open type, the IB high or low is exceeded by price in the balance of the RTH period. Think about that. The high or low is exceeded in the balance of the RTH session. Could be 1 second after 9:30. Could be 1 second before 4 or 3. 4. I'm sorry, or 1600. It could be the high. It could be the low. Pretty much untradeable. But it is definitely a widely known statistic, and you just have to, it's more of a gamble because you just have to kind of say, well, we're at the top here, so it looks to me like that's the way it's going to go, whatever. There's also a statistic now that Rod in the TLab cooked up, who's a good coder and trader, does a lot of statistic stuff, that the high or low of the first 30 minutes has a very high 80s probability of being exceeded in the second 30 minutes. They call that then the IB30, and they call the old-fashioned one the IB60. This is going to be an example of the IB30, perhaps. So the IB is set right here. Oh, no. I'm sorry. Yeah, the IB was set right here, previous to 9 o'clock. Now we're past 9 o'clock, so the IB30 stat is on the table, saying that somewhere between 9 o'clock and 9:30, this IB high or low, but one would expect the high because that's where we're trading, will be exceeded. Now, is that tradable? Well, this is 2,700 and this is 2,900. So that's 2.5 points. That's not within the 3-point range. And we've traded up here 3 or 4 times. So for me, I don't think it's a high probability trade in this environment. What seems to be more probable, I don't know about that. I was going to say the mean reversion is seeming to be more of a probable trade. And the guys that took this pop and shorted it back to the mean reversion, that was a good idea, a good trade. I was on the other side of that trade. I should have taken, I guess I should, in hindsight, rear view mirror, I should have taken them off. I should have taken my profit right here and flipped short. But, I'm not that good at driving in the rear view mirror. And what's to make you think it's not going to go on up to the naked volume point of control? That was my target. Right up here. Okay, like, for example, okay, here we are. What do you think is going to happen? This is the hard right edge. Is this going to go on up here? Take out the high, go on and set a new IB high, come up here and get this high volume node and part points north? Well, it didn't, but now they did. And we've still got the close and a bunch of stuff above us now. So the IB30 stat was met, and that thingy up there. Is it going to go up or is it going to go down? Here's the hard red edge. What's it going to do? You going to mean revert, or is it going to head up to the close and previous points? Looks like it's going up, but how would you know that? I mean, that's the difference of the hard red edge or not. And at this point, for me, this is a breakout. So it's not a valid trade. Testing down to the overnight point of control. We've done that couple of things there. Well, that would have been a pretty good trade, actually. That pullback, buy the pullback or buy the dips or whatever they call it. Prices overlapping. All right, so we have a we've taken out that or extended that extended the IB high, IB 30 a couple of times, and now we have the actual IB statistic or IB 60 approaching here at the bottom of the hour. I'm not at all warm and fuzzy about getting in any of these trades. I'm very disappointed that my scratch trade didn't go to target and or that I wasn't quick enough to reverse, but that's just when I'm trading in that direction, I think that's the direction I'm trading, I don't switch to mean reversion that quickly, I guess, which is my problem. That's for sure. My problem. Oh my gosh. What are we doing here? Where the hell is VPOC at? 21. Wow. I think everybody's in a pile here, if I'm not mistaken. And I'm correct. Not only is this a previous VPOC again, but it is a current one. So yeah. No, there we go. Now we got him to jump up here just one tick ahead of where we were before. Isn't that amazing? See the benefit of the flags. So is this a VPOC migration? And now you take this long? Like they were all talking about having done that earlier. So let's see. Well, there's only one point between the VPOC migration and the full session VWAP. So that's off the table. Had you taken that, it went up as high as 27.5. So it went up 1.5 points. So you got salt shoved up your backside. And now, and we got the developing value very low, the overnight mid, the overnight VPOC, whatever the hell this is, the overnight VWAP, all within the 3-point range. So just tough for me to see a deal. I got to really stop and think about all this requirement in my trade plan. And if I could get up to speed with coding fast enough, my theory is that you've got to have a good, efficient, accurate backtesting system, whatever that is. Python, don't know what, maybe even Excel, where you can quickly do what ifs. What's the probability that I reach my scale? What's the probability that I reach my second target at 48 ticks? How about 36 ticks? How about 24 ticks? Is the 3-point range a valid criteria? But these are all ones that I am struggling to get coded up and be able to do them all efficiently and effectively, and also, make sure you got the right data so that you're really doing it accurately. Man, I hope I can last through this meeting. I am just so tired at the moment. What am I even doing? I don't even know. I'm looking for somewhere totally. Man, I'm tired now. To see the data that anybody has in these trades in this context, because I think it's horseshit. Yeah. So lots of people are doing lots of things. Well, we seem to be doing the mean reversion dance here pretty obnoxiously. So far, we're in and now we're in higher highs, higher lows, I guess you could say. It's very possible that we just flop right back and forth around inside of here too, after that big pop from yesterday. A lot of consolidation yesterday. Big day, new all-time high, could very definitely be an inside day and or neutral day, which means we don't take out either the IB high or the IB low. In other words, market's going to go up or it's going to go down. No, that's really what it is. I guess before I collapse from exhaustion here, I'll it's worth talking about trading as a business. This is the holy grail. So, take notes. It is actually the truth and the holy grail. If you to have a trading business rather than a video game or gambling or gunslinging is totally different than the above. Actual professional trading as a business is a statistical business probabilities. And what that means is you identify a potential setup like this VPOC migration that I've been talking about here, or the IB stats, or any of those things, and you establish what you feel are the correct parameters to qualify that trade. Then, away from the market, with the backtesting software or something, or Excel, whatever you want to do, you capture and identify a minimum data set to be statistically significant, which I think most people consider at least 50 examples, the more the merrier, of that exact trade with the exact parameters. And in my opinion, that means contact, opening type, context, all of those things. Not just a small micro glimpse, but the big picture glimpse. And you identify whether that specific trade and that with that those specific criteria have a positive edge or expectancy or probability, whatever word you want to use, or not. If they do, if it does, then your job as a trader is to take every example of that trade that presents itself in the live market. And you rely on the law of large numbers to manifest that edge to your account. That is the real business of trading. And that's not just me saying that. That's Jim Simons at Renaissance Technology, the most successful hedge fund owner, trader in the world. Ray Dalio, Soros, Sosnoff, educators like Mark Douglas. Anybody that knows about trading seriously as a business knows that it is a random market. The outcome of the very next trade is 50-50. And so you establish a trade with specific set, and I mean specific. All the context has got to be the same. The scale's got to be the same. The stops have got to be the same. The runner's got to be the same. Otherwise, you're not comparing apples and apples for that subset. If you want, if you want to capture one subset that's got a 48 tick runner, then you got to do that. If you want to change it to a 36 tick runner, then you got to do another sample set of that to determine whether those specific parameters have an edge or not. If that sounds familiar, it is the exact business model of the gaming industry from the point of view of a casino. Absolutely. They play no games with which they have not identified an absolute edge and specific rules. And then their mission as a casino on the floor is to play as many instances of that game as they possibly can in a 24-hour period. And the law of large numbers manifests to their account. And it should be pretty obvious, taking a drive through any casino town, how well that works. Do gamblers win? Absolutely. It's a cost of doing business. When a guy wins 50 grand or whatever, $500, 50 grand, whatever the amount is at the 21 table, does the dealer come over and shoot? Does the pit boss come shoot the dealer? Does he run over and change all the rules? Absolutely not. The reason that they are completely unemotional is they know that they know their job. And their job is just to deal as many hands as possible because the edge is already built in. Roulette. There's 36 numbers, black and red, on an American roulette wheel. Then there is a 0, which is green, and a double 0, which is green. That means that the house has about a 5.62% edge in that game. You trade, you play that, you spin that wheel 1,000 times in an hour. The house fully expects to make $50 for every $1,000 it's bet. Simple. So what's the object? Get them to bet as many $1,000 as you can. 21. I don't know the percentage, but there's a percentage edge for the house on every hand of 21. What's the mission? Deal as many hands of 21 as you can. That is the real secret sauce or the holy grail of trading. And it is not fun. You sit on your hands most of the time. One of the advantages of having the vetted trade and trading as a business is nothing's a surprise. You know that a specific trade, let's pretend that your trade setup is a VPOC migration, wherever my correct mouse and keyboard went, VPOC migration. So when this VPOC migrates up here, whatever your setup is to trade further up, okay, let's say that your setup is when it trades up here, it tests back down, and then that's your entry trigger. This this is hypothetical, and that's your entry trigger, and then there's your scale, and then there's your target. Forget about the 3-point range, forget about all that stuff, just the basic setup. The minute that happens, you take that trade, case closed. But when this migrates up, you're on high alert. You realize that now I've got the first step in my setup is off the, first tick box. Now, is it going to come back, and is it going to come back down and retest? And then are we going to get buyers? Now you've got confirmation, and you've got your trigger. You're in the trade. Case closed. What happens? You get your scale, comes back, buses along here, probably got stopped out right there. Definitely got stopped out right there for a scratch. And then you look for the next one. There's no surprise. It's not gunslinging. It's not seat of the pants. It's not, I thought so. You're focused on the market. You have a setup, and you do it. You trade it. Case closed. That is trading as a business and the holy grail of trading. And I've already talked about trade location and the asymmetric trade setups and how important the risk reward is. If you have a 1-to-1 risk reward, it's really hard to be successful because you take 2 stops in a row. You got to take 3 positive trades in a row to get 2 to get back to even and 1 to get ahead. That's tough. If your risk reward is 2 or 3 or maybe 4 times to 1, then you take 1 stop or one good trade, and you can take 3 or 4 stops in a row and be even. That is also the law of percentages and probabilities. I don't know if it's really a law or not, but that's a fact of that. So that's something you have to, all of those things, asymmetrical trade, win rate, risk reward ratio, those all skew your edge in your favor. The 3-point range. If I have a 3-point range and I take a trade down here, I've got this obstacle, which detracts from my edge. I've got this obstacle, which detracts from my edge. I've got this obstacle, which detracts from my edge. You see? Otherwise, if I'm up here, where is there a 3-point edge? Well, this would be a breakout, so that sucks, but you get the point, right? If you have the 3-point range unobstructed to your scale, that's a huge plus increase in your edge. That's the name of the game. You want to skew the possibilities and the probabilities in your favor as much as you can to increase your expectancy. That's not just what I believe. That's what I repeat from what I know, which has been taught and expressed by the most profitable traders in the world, which is saying something, right? If it was just me saying it, I would understand who's this guy. But, this is stuff from the most experienced traders in the world, so I think it's got merit. and I'm inhibited by the entire 3-point thing. Number one, and number two, this is the middle out. So far, we have been in a mean reversion. Okay. Right mouse here. Got to get the right mouse. There we go. Trade down, trade up, trade down, trade up, trade down, trade up, all around the mean. Now it's jumped and jived around here, but we're trading around the mean. Mean reversion. Outside in. Outside in. And that is the predominant trade of the markets, much more so than a range, than a trend. Trends are much more rare than a rotational or auctioning market. That's just the nature of the beast. And here we go again from the overnight point of control back down to the mean. And I'm going to get mean here in a minute and go to my meeting, and then I'll have to really evaluate nappage. Seems like it was a short night. I ate a leftover ham sandwich I'd made for my daughter, and I'm in a goddamn food coma here. In a moment, of course, of thought for our poor fellow traders and comrades in Florida this morning after once in 100 year or something hurricane hit them. I think it did get downgraded. I think it only came ashore at a Cat 3, but rather than 5, which is always good. But typically what happens when a storm goes downgrades, it spreads out. And when it spreads out, it pushes more water. And one of the big problems in Florida, besides the wind, was the storm surge and flooding, which is increased actually as when a storm downgrades and spreads out because there's more wind pushing more water. Just pretty simple. It's hit pretty hard, I think, 3-4 million people out of everything, and really water, some serious flooding, 13, 14 feet of storm surge above high tide. So, yeah. And let's see now, 40. Okay, top of the hour, I have this meeting thing. Man, wife's baking bread, so the house is full of fresh baked baguette. No wonder I'm fat. So now we're getting out of the 3-point congestion area. We've rotated down to the developing value area low. And unfortunately, the trade now would be down. I mean, the unobstructed path is lower, but it's a breakout. So I got to switch headsets and get on to this meeting. Well, wow, what a crazy meeting. I swear to God, some people like to talk just to hear the sound of their own voice. Jesus. Okay. So what's happened? I'm sure I missed a whole bunch. Yeah, there we go. IB high is out now. So the IB statistic has been made right now. And we still have close and settlement above us. And the ETH high is living up here somewhere, which is a pretty well-known and respected statistic, but not particularly a high one in this open configuration. Hello. I'm gonna have to go over to Home Depot. Our air conditioners looks like it's on the way out here. I got to get some stuff to take care of it. So I'd like to throw another trade on here, but I'm not thinking it's going to be particularly good idea at this point. Again, this be basically breaking out, heading for this low. And from an asymmetrical trade location, it's completely horrible because this would be right exactly where all the traffic is from up here. Now, I was standing here when this happened, and I was looking at a short retest again. But timing's everything. Also trying to Google what to do about an AC fan unit. So I'm going to pull the stream here, and I will leave it public. Or maybe I'll just wait when I go get my daughter at 3. I can swing over by Home Depot. It might work. We'll see what happens here. This is going to be, I'll let this run to 3 and then shut it down. But our aircon, I need to do some stuff here. So I'm not even focusing on the market at all at this point for about the last couple hours. Unfortunately, was a interesting day. Did have one trade early on, which, got the risk neutral scale and then obviously didn't touch anything, and it came back to a scratch. So that's the beautiful part about that, about the risk neutral scale idea. Concept is that you can take a trade and the minute that risk neutral scale happens, all psychological drama is gone. And I'll see if I can find. Well, here was the report. And let's see here. I don't see the trade here any place. Am I losing my mind? That's possible. Yeah. All right. So here is the. We came off of here, and I was a little bit late on this. I wanted to take this trade. I don't trade off the VWAP, which was at that point, and I, which would have been here. I did take this trade here. I mean, off of VPOC. I'm sorry. I did take the trade here off of the the open, targeting the overnight mid and the overnight VPOC, and then. At the time, it was the IBE high wasn't up here, but we have settlement and all these levels above us. There's the risk neutral scale. It couldn't make it past there, and came back down for a scratch. I always move this up just a couple of ticks to allow for a commission, and came back for the scratch. So, that's the way it works. The market is random, and the outcome of every trade is 50-50. So now, had I taken both trades off here, okay, but that's a 1-to-1 risk-reward ratio, and I've talked enough about how that's not really a good idea. This would be the runner. So that was the trade, and it is. Now I got to get back to Google and Home Depot for what I'm going to do about how to clean my condenser coils. What is this stupid crap? What this guy's even up to here, but I don't think I want to watch that anymore. Yeah. So I'm going to be out of here at the top of the hour. We'll see what happens. Now we're in power hour. We did go neutral by just a tick. So that was this IB high failure was a great trade. Obviously, I didn't take it, but was during lunch hour. And then we came down here just before 2 and did take out the IB low. So it's a neutral day now. And we're back up into value area and see what's going to, they brought the micro composite, or they brought the VPOC back down a little bit lower. Yeah. Right down to the developing value area low. This would be a trader's lab structured trade called the VPOC migration. That's one of the ones I've talked about a lot. It's just one of the trades that would be ideal to vet or to, properly establish whether it has an expectancy or an edge, because it's so freaking obvious, right? I mean, how can you miss that big yellow line zooming around? It drops down and your expectation would be a short. But what is the setup? What's the trigger? Yeah. And in this case, at this time of the day, I'd be a little bit apprehensive that we were going to go a lot lower, that it might well be they would come back up and see if this price was still too high. We've got there's the open. We've got VWAP, Globex VWAP, the mid. Lots of stuff living around up here. And it's a fairly short range considering what we have had. It's only about 14 to 46, so it's 32, 33 points total. Okay, what is this guy up to here? I don't know. He says that's what he's going to do, but he's not doing it much, doesn't look like. All right. So, okay. I'll be out of here at 3, pick up my daughter, and get over by Home Depot and get what I need to try to get this evaporator, this condenser cleaned out, hopefully today. Afternoon yet. Hope. Been getting all of a sudden a surging, real irritating surging noise. I think before I do anything, I'm going to service and clean the condenser unit. Fortunately, the heat is backed off a bit. It's 91 now, or 33 if you're from the rest of the world. Still pretty damn hot. Pretty funny to think that 91 isn't very hot. It's unusual. So we'll have the 1450 MOC numbers pretty quick, and that usually always has a pop. Don't even have my keyboard organized here in case I would want to take a trade, which I wouldn't want to do necessarily. There's sometimes closing swing trader that 1450 is a reasonable idea. We've got pretty much this has been pretty quiet day, actually, pretty much balanced distribution. See over here, they filled in a bit of this singles gap down here from the high or from that squeeze yesterday. Going to be an inside day for sure. Unless something dramatic happens in the next 15 minutes. So that's so much to be said for that risk neutral setup. Really, really nice. Okay, come on. This could be exactly the way to end the day right here. What am I doing here? Okay, 48. Here comes that big ping at 50. You see exactly why I just, once or twice today, this VPOC migration was a pretty tradable thing. It fit all the context that I associate with being a viable structured trade. This is a perfect example of what happens to me 90% of the time. Okay, so here we come. Pulls up, comes back down. What happens? We don't get through it. Nothing happens. So I guess the theory would be to wait till it goes through. The problem I have, I guess the shortest part of this story is the problem I have with this, with actually statistically verifying a positive edge. Obviously, the criteria has to be well established and it has to be consistent. Each of the minimum 50 trades captured to identify or verify the probability has to have exactly the same criteria and setup. So, yeah, in this case, you'd be stopped out. If if I'd have gotten long anywhere in here, I'd be stopped out without any possibility for a scale. I'm not saying that would, and and oftentimes what'll happen is it'll pop down through here and then, so where is the trigger, right? Came down, up, comes back down. If it could get through there, then you start getting into a situation, in my opinion, where it's not an advantageous or asymmetrical trade location. And here we are running up to the top, and they're probably going to pop it at the 50. So that would be interesting to see. This is market on close orders are released at 1450, and then I guess another batch from somewhere else is at 55. So someone told me. I don't know why the hell they do two of them, but I guess maybe they aren't all placed at 1450. I don't know. So we're up to all the VWAPs, the open. So what have we done? We have traded all around the mulberry bush, and here we are right smack dab back at the open. In other words, this entire day was an exercise in speculation, having nothing to do with the value of the S&P so far. Man. These kind of slow grind things are real frustrating for me also. There's a bunch of absorption there and some buy absorption for all that selling. That's what this is. This is a book map absorption indicator. These guys here are stops, icebergs, or absorption actually. This stream will be, these streams are all so long, all right, 7-8 hours, right? Because I have them up the entire day because I have committed not to take any trades off the stream. So, I don't want to be in a situation which did happen before where I didn't take a trade because couldn't get the stream organized quick enough. So the obvious solution is to just not to let it run. But when there are full days and there's no trades, I generally don't leave them up as public because who the hell wants to, hear that or just look at it. So if there's a trade, I do that, and I have a system with hotkeys where I capture all the chapters and stuff, and I will I put that in the description so there are chapters for the stream. They're going to just keep fussing around slowly up here, like it's just irritating. Just irritating. And none of this stuff meets the 3-point range, right? So irritating. This was this naked volume point of control I set every evening at the closing RTH volume point of control. In other words, if we close the market right now at 82.20 half right here, these flags I remove, and then this naked volume point of control flag would be right there. So yesterday evening at 3 o'clock, or 6 o'clock actually, 1600, this is exactly where the POC was, the RTH POC. And we jump back up to the right on top of the ETH VPOC. So this is the POC from all of yesterday, all of the ETH session from 1700 last night until 1600 this morning, 08:30 this morning. What are the odds, Think about it by the definition. The definition of the POC is the price at which the most contracts have traded so far in the session. What is the statistics? What are the odds that the exact same price would be the most traded? In other words, they definitely have accepted that as retail, right? That's the most fair price in everybody's opinion. Two full trading days running. That's pretty incredible. Well, no, I shouldn't say that. And one full trading day, all overnight and all of today, because yesterday's POC at the end of the day was a couple handled above here. So there we go. I can't imagine what the probability of that is. So at 1500 here, I will end the stream and go get Princess. And then she's going to get the express pleasure of riding with me to Home Depot. Yeah, I'd say they're going to just fluff this off. Now we might get a closing swing trade at the cash close, which is 1,500. That's very possible. A big flurry. This iceberg is doing something crazy. And we'll see what they do. They got a minute. We don't have long to wait. Yeah, so one trade today, scratch. I'm still scratching my head about that event statistic thing that I've been strategy that I was been kind of working on in the back of my head for years. See what happens. The next number comes out. It's just a game. It's not any part of real trading, so I don't keep it. That's a separate stream. I shut the stream off after that happens and then start this proper one. Different account, different everything. So it's just theory I'm testing. Here we go. Now, what are they going to do? Cash close. Bang, up, down, all around. And remember when I said, here's this VPOC migration down, what are they going to do? Test it up and see if it's too high? Oh my goodness, look what they did. Right exactly up here to see if it was too high. And now what are they doing? So this VPOC migration trade south would have been had a bad outcome. And there's 3 o'clock. And there's the absorption indicator. That's too much volume hitting. We got a big spike of it right down here. I wish that stupid pop-up thing would not happen. You can see where it's doing the whatever they call it, right here. It prints that gold line up and down. Not absorption. It's where they consolidate. Well, they get too much volume, so they consolidate stuff. It's not the right word either, but anyway, whatever. It's a pain in the ass what it is. Now it's over with. So that's not much of a cash close there. So have a wonderful day. I will be back on bright-eyed and bushy-tailed at 0800 in the morning for the pre-market. Let me just do something here quickly. Now that I piped up, let me just make sure that there's not some number I'm not aware of. We should start the earnings crap tomorrow. Yeah. Hate that. Well, there's PPI tomorrow at 7:30, but that's not typically a mover with enough volume for the strategy. So I'll look at it later tonight. But anyway, if the stream starts at 7:30 or 7:15, you'll know that I thought it was worth doing. Yeah. So there we go.